In the first half of Chapter 5, we took a look at the adjusting process and how it was necessary to be in compliance with the matching principle. In this video, we'll look at the second half of Chapter 5. The second half of Chapter 5 focuses on the worksheet. The worksheet is an internal tool that's used to pull together all of the adjustments that we previously discussed. The starting point for the worksheet is the trial balance. You'll note that this is the same trial balance that we've been talking about for several chapters. We talked about 3 adjustments, and in each case, the adjustments made the assets go down and the expenses go up. The adjusted trial balance will show the new updated balances and will become the source for our financial statements. The worksheet also gives a rough draft or a preview of what the income statement and balance sheet will look like. Let's take a look. You'll notice that there are 10 columns. That's why this is known as the 10-column worksheet. Let's preview what's ahead. The first 2 columns are the exact same trial balance that we've been dealing with. Because we learned that there are 3 adjustments that are needed to comply with the matching principle, the next 2 columns will be used to record the adjustments. The next set of columns are the adjusted trial balance columns. We will demonstrate how to do the horizontal math in coming up with the new balances. After that, we'll take each amount and drop it into one of 2 statements. Either the income statement, which will be used to hold the revenues and expenses, or the balance sheet columns, which will be used to hold all else. Notice that there are no columns for the statement of owner's equity. In the previous video, I used prepaid insurance to demonstrate how the prepaids were computed. In the rest of this video, we'll go ahead and stick with the author who uses prepaid rent instead. All principles are the same. Off with the same trial balance we've been using for several chapters now. The next set of columns is where we dropped in the 3 adjustments described in the previous video. A was the supplies adjustment, B was the prepaid adjustment, and C was to record the depreciation. The next set of columns is called the adjusted trial balance. This is where the horizontal math takes place. Notice on the 3rd line, the supplies account was reduced by $500, and so we take the beginning balance, subtract out the credit because credits make the asset supplies go down, and drop in the adjusted trial balance of $1,000. We do this for each account, and don't forget, at the bottom of each of these first 6 columns, the debits have to equal the credits. The last 4 columns are a preview of what the financial statements may look like. Every number from the adjusted trial balance columns must be dropped in either the income statement columns or the balance sheet columns. The revenues and expenses are dropped in the income statement columns. And down towards the bottom, the difference between the revenues and the expenses is the net income. That same net income that balances out the income statements must also balance out the opposing side on the balance sheet. The last step is this balancing out feature. After you drop the assets, liability, and equity accounts into the balance sheet, the same offsetting amount that balanced out your income statement must also balance out the balance sheet on the opposing side. It's difficult to show all the numbers on a video, so please take a moment to review your textbook and make sure that you understand each and every line, and especially how the balancing feature works. The last part of the chapter is a review. Let's see how well you remember the 3 financial statements. Notice that each line from the income statement columns of the worksheet are carried over to the formal income statement. Once again, the income statement shows the revenues and the expenses and the resulting net income or net loss. The purpose of the income statement is to show whether the business was profitable or not. In this case, for the month ended December 31st, the company brought in a profit of $33,667. The second statement, the statement of owner's equity, shows whether the owner's capital went up or down. In this case, over the month ended December 31st, Trayton Eli's capital went up from $100,000 to $128,667. Finally, the last financial statement, the balance sheet, is prepared proving that the fundamental accounting equation is in balance. Each line from the balance sheet column is carried over into the financial statement. Notice that, as always, on the balance sheet, the total of the assets must equal the totals of the liabilities and equity. Also notice that Eli's capital account was carried over from the statement of owner's equity, not from the worksheet. The last step is to get the adjustments from the informal worksheet into the journal. The only way transactions can make it into the accounting system is through the journal entry process. So the last step in your textbook will show the 3 adjustments formally journalized and posted to the general ledger. Let's end this chapter with a review of the accounting cycle steps. You should be starting to commit this to memory. Step 1, we analyze transactions. Then we journalize the data into the general journal. Third, we posted the data to the general ledger. Fourth, we prepared a worksheet. Fifth, we prepared formal financial statements. And sixth, we got the information from the adjustments into the accounting system by recording the adjusting journal entries. The last 3 steps in the accounting cycle are all we need to learn to finish up the accounting cycle for a small service-oriented business. We're heading towards the end. This is Professor Johnson signing out.